Hey everyone, welcome back. Just doing a quick sound check and then we can get started. So we are going to talk about psychology finally. Alright, my name is Vito and Henjoto. Tonight's topic is going to be trading psychology. This is part 1. We want to get the foundation right for this one here. Okay, let me know if the audio is coming through okay and then we can get started. Audio seems to be good on my side. All right, welcome back, everyone. All right, so good to have you all back here on a Friday. And as per usual, on Friday, we are going to continue with our educational series. And we're finally here at Trading Psychology. So I think we will, you guys probably know how important trading psychology is. All right, so we'll get the foundation right. Alright, just before we begin, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. We do not offer signal service, managed funds, or other personalized advisory services. Please be aware of scams that promise guaranteed returns or managed accounts. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. All right, sounds good. Everything's good. We'll get this started. So we're not going to cover a lot, but it's going to be a lot for new traders here. But we are going to talk about what is really trading psychology when it comes to trading. I want to talk about stages of trader competency. I think because everyone's going to find themselves at a different stage. So, kind of quiz yourself on what it is tonight and then, figure out where you are at your trading journey. All right, and then we are going to take a look at a few examples on how do you actually improve your psychology in trading. Okay, so let's take a look at the meaning of the word psychology. This is basically, psychology means a science or study relating to the mental process, both normal and abnormal, and their effects on the behavior. Okay, so this is as simple as that. All right, this is the definition of what psychology is. It's a study relating to the mental process, your mental process, both normal and abnormal, and their effects on your behavior. Okay, so before we go on, let me just talk a little bit because I think a lot of people are, just wondering, how do I get through as a trader? How do I survive that long? Blah, blah, blah. All right, and I think a lot of new traders are gonna think, yeah, you know what? Be good with technicals, be good with fundamentals, and those kind of stuff. But I'll be honest with you, I'll be frank with you, and let me quantify this. I think about 10% of it would be technical, 10% of it would be fundamental, 80% is psychology. I don't like to factor in luck because I like to quantify stuff. So yeah, but if you put what's quantifiable, how's your technical skills going to affect your trading, how's your fundamental knowledge going to affect your trading, they combine the two of them, they're only going to net you 20%, right? 80% is actually your behavior on how you actually react to changes in the market. Okay, that's the key. So if you think, yeah, you know what, trading psychology, it's easy. It's not as easy as you think it is, right? We all know it's all the basic trading psychology. A lot of people tell you, hey, don't do this, try not to do that. And by all means, when it comes to trading, when you are actually trading, a lot of them actually goes out of the window. Okay, so 80% I would say trading psychology and risk management. So yeah, when it comes to risk management, I actually like to put them together with psychology, because if you don't have a great foundation in your trading psychology, you wouldn't be able to actually manage your risks as well. So yeah, there's a lot of things to actually consider. So some of you just jump in here asking, how do I get started, how do I join you guys? You can always start here. This is super great if you are a new trader, because we are going to go through the stages of what trader goes through. Okay, so this is psychology. Now let's talk about psychology in the context of trading, right? So trading is directly related to the emotional state of the trader. And traders who are undisciplined and distracted by emotions will continuously make mistakes and forget their trading plan. Okay, so this is why when we talk about, all right, this is my technical outlook, this is how I look at the market, this is what I'm expecting with the fundamental release. So I've got my trading plan, but if you don't have a good trading psychology, then as I say, midway, you're likely going to throw it out of the window. So discipline, it's probably one of the word. I don't really like the word discipline. But yeah, I think everyone needs some discipline in a certain context. But I'm gonna be different here. I'm not gonna say discipline is the key when it comes to trading psychology. It's actually something else, but we'll take a look at that later. All right. So when you get distracted by your emotions, you're gonna make mistakes, and then you're gonna go sideways. You're not gonna follow your trading plan. That's going to result in losses as well as irrational and unwise trading decisions. Let me give you a few of this irrational and unwise trading decisions. It would actually come from overtrading, right? But these unwise decisions are actually going to be triggered by the four emotions that is actually going to interfere with trading. Look, there are a lot of emotions. All right, I'm just going to highlight, if you come down to it, there's actually only going to be four of these emotions that's actually going to affect your trading. Number one is hope. Number two is fear. Number three is obviously greed. That's basically the reason why everyone started trading in the first place. And then number four is getting overconfident. Okay, so let's talk a little bit about hope here. Hope, I'll list it as number one. I don't hope in the market, and I would assume after you go through this session tonight with me, you will start to move away from hoping in the market. All right, hope, it's a huge word, right? It carries a lot of impact with it. It's a pretty heavy word, right? When you hope for something to happen, it means you don't know if that's going to happen, right? So you start hoping, and let me give you a very good example. If the market goes against you, a lot of traders would actually just kind of add to their position, hoping that the market will reverse and you would actually gain a lot more, or you will actually cover your losses, right? So this is something I call this is something we call martingaling. So if someone tells you that, hey, if you're in a losing position, just add more into your positions, because once it goes back, right, you'll cover off all of your losses. This is called a martingale strategy, and this is theoretically fine. The only problem is it's only going to work if you have unlimited amount of money, and that is something that no one in this world is going to be capable of, right? Everyone has a limit. Even Elon Musk or Jeff Bezos have a limit to how much money they have, right? A country does have a limit on how much money they have. So, the theory doesn't make sense. And this is hoping. All right. To me, if you start hoping in the trading, and don't lie to yourself, right? And I'm gonna ask you guys if you guys ever had this thought, right? I hope the market is going to turn around and everything's going to be fine. I hope the market is going to reach my target. I hope the market doesn't touch my stop loss. Yeah, if this ever happened to you, if this train of thought occurred to you, type it in the chat, and I want to see how honest you guys are. All right, I've got a lot of people watching this right now, and if I don't get that amount of response from you guys, that means you guys are not even following me right now. But if you guys ever hope, all right, then let me know in the chat, okay? Because to me, hoping, it means that you're already wrong, okay? So I never hope in the market, and that's something that's not easy to achieve, okay? This, hoping now, this is what happened, and some of you guys, no matter how experienced you are, this is something that will always come across your mind. You will start hoping. Will I make a replacement of a trend? Yes, right? All right, hope. So I don't like hope. I don't like hoping. I'm quite religious, so I pray, and we hope, right? That's basically just human nature, that we pray for something to happen. We hope for something to happen. It's normal for a human being to have that train of thoughts, and it's completely fine. It's just that when it comes to the context of trading, just don't hope. Never ever hope in the market, because it's just going to ruin you. All right, so this is something that I need to pause a little bit, and I need to drill in what hope means. Just, if you ever started hoping in your trading, most of the time you are probably wrong in your positioning, right? And if you don't have a good exit strategy, if you don't have a backup plan, every time you start hoping, I think it's probably a good time to actually close out of your position and rethink the situation. You don't have to get out straight away, but at least when you start hoping, take a look at the market again and try and figure out if you got it wrong. Okay, because most of the time, about 90% of the time, when you start hoping, you are already wrong. Turns out to not what you hope for, and anger starts. Yeah, look, anger could be part of the emotion, right? I'm not even including anger in here, because anger is a completely different thing. Anger, it's an emotion that's triggered by something else, right? So we're really talking about what is triggering your anger when it comes to trading. Why do you want to get angry when it comes to trading? Why trade if it makes you angry, right? So, no matter what situation I'm in, I always take the market with a positive vibe. I never complain when the market is crashing. I don't go crazy when the market is in in my favor. That I try to be a little bit more neutral. I find joy in trading. If you don't find joy in trading, if you find anger in your trading, then take a look at this 4 and figure out what actually triggers that anger. Okay? So yeah. So a lot of you answered yes. At least you guys are being honest. And I like that. That's true. I hope a lot. Anticipation versus hope. Anticipation versus hope is anticipating something. It's a completely different thing than hoping, right? If I were to anticipate something in the market, I've done my calculation, I've done my risk, so that's anticipation, right? Anticipation, it's not hoping. Anticipation, what's the synonym for anticipation? It's waiting for something to happen, right? It's different from hoping. Anticipating something is I have a higher probability in knowing that something is about to happen. That would be anticipation. Hope, it's when you are completely in a deep hole, right? I don't want to say the S word, but you will only start hoping when you are in trouble. You don't start anticipating when you are in trouble. So I think, we can talk about English grammar and stuff like that, but these two words are very similar, but they have a different weight to it. Anticipating and hoping. Hoping only happens when you are hopeless. We'd never say anticipateless, right? So we know it's hope when it's hopeless, you start hoping. Let's just put it that way. So that's number 1, hope. All right, register this, and if you have a vision board or something like that, or something to stick on your desk, I would stick this 4. All right, number 1 is hope. All right, number 2 is going to be fear. Right, but fear can be a good thing, right? So here's hoping. When you start hoping, that means you are actually afraid of something, right? What are you afraid of? To trigger that hoping, all right? Maybe you're afraid that the market's gonna hit your stop loss. You're afraid that you're gonna blow up your account. These are the kind of fear that's going to affect you in trading. You are afraid that you might have made the wrong decision. So fear can actually start before you even trade, all right? Some of you are actually afraid of placing your trade because, maybe you moved on from a demo account to a real account, and all of a sudden, even a cent losses or a 10-cent loss or a dollar loss actually adds up, right? So when you demo account, that's a completely different thing. But the next thing that's probably going to be real, look, I know it's definitely going to be real. It's when you transition from a demo account to a real account, right? The thing that you're going to be feeling is going to be fear. It's going to be fear. You're going to be afraid that your decision could be wrong, right? So even before you hope, fear's going to kick in. But you're not going to feel it until you start hoping. But when you start hoping, your fear is just going to double up. Okay? So we're not talking about fear, risk sentiment, like fear in the market, right? Every trader is afraid of something. That's different. That's that's a negative risk. That's a negative sentiment in the market. That's a risk-off mentality. That's a risk aversion mentality. We can take advantage of that fear, right? So this is more about fear that you experience as you trade. Okay, so that's fear. Pretty simple, and that fear is actually gonna go on and on until you are, until you get your trading psychology pat down, until you get your discipline all up, until you get your consistency all up. Fear is just gonna linger around, right? Like, for example, Albert is saying like his I know Albert because he's been following the webinars for a long time, and his experience, right? He's not someone new in the market, but there's always fear in it, and then he started hoping. So I think it's pretty normal. Fear will come in when you open a position. fear will actually kick in again when you're about to close your position, because you fear that you might have taken your position off early. You fear that you might be getting out early. See that? This fear could start from something negative, or this fear could happen when something is actually positive in your trading as well. Which leads to greed, because greed is why you're here. Don't lie. I've never met a trader who doesn't start with wanting to get rich in trading. I've never met one, right? I've never seen a trader that started trading because, yeah, you know what? I just want to learn trading. Learning to trade, that's one thing. But initially, when you started trading, you just want to make a lot more money. You want to make a lot of money. You want to create a passive income. You want to change your lifestyle. Those are your reasons, right? But it all starts with greed, and it could all end with greed as well. All right. So let me give you an example why greed started everything. Because when you are a new trader, you are actually going to start opening a large position, hoping. See that? See what I'm trying to do here? Because of your greed, you're going to open up a large position, hoping you're going to get it right. You're going to hit the jackpot in a very short period of time. So greed's going to kick it off, and then hope is going to kick off. And if something went wrong, fear is just going to play along. So somewhere between your greed and your hope, fear is always going to be there. But greed is basically what starts you here. Okay? Greed is good. All right? What Gordon Gekko said, it's not wrong. I think greed is good, because without greed, the financial system would be dead right now. Okay, that's what I'm going to say. But greed, when you are in a good run, that could actually damage your trading. So we're talking about overstaying in a position. All right, because let's say you aim for a 10 pip gain. And then once it gets to 10 pip, you are actually going to say, you know what, I'm having a good run. Let's take this to 20 pips. When it comes to 20 pips, you're going to say, you know what, let it run to 30, 50 pips. You just don't want to get out. And this will happen if you don't have a good trading plan, because you don't know when to get out. Okay, so that's greed. And greed is actually going to impact you a lot more as you know more about trading. Okay, as you journey into your trading life, the more you trade, the more winning positions you have, the more greed is going to grow. Why? Because you are going to be so overconfident that you think the market can't harm you. All right, you think you're better than the market. You think you're better than the next trader in this room here. So we get overconfident. It's normal, okay? And when I say hope and fear, that's going to affect beginner traders. Greed and being overconfident, that's basically your mid-tier traders to, the more veteran traders. They're gonna experience that greed and being overconfident. So yeah, we start with hope, we start with fear, we start with greed, we start with being overconfident. This four is interchangeable. They are going to always exist when it comes to trading. So we are talking about psychology in the context of trading. I have fear of exiting at the right time. So yeah, let me go through the questions, because I think there's some good stuff here. It is hoped that one day I will be a successful trader like you. That's not hoping. You see, Mohammed Baba, let me answer you this one here. If you hope that one day you would be a successful trader, that's not really hoping. That's setting a goal, right? That's not really hoping. You set a goal, and hope would be the right word. If you don't put an effort into it, you're hopeless. And you just sit back and you hope that you'll be good. That's hoping, right? But If you set it as a goal, that means you work towards that goal. That's no longer hoping, because any work that you put into that goal, every step that you make, that's not really hoping. That's working towards your goal. Okay. Yeah, surrounding webinar on risk management. Yes, we will have risk management. I believe we are going to have risk management in 2 weeks' time. Any recommendation on how to break through fear of entering a trade? It comes and goes occasionally. Yes, that's why we are going to be here for, right? We are going to talk about overcoming these 4 issues, so don't worry about it. If I didn't talk about it, then yeah, we will continue on. I have fear of exiting at the wrong time. I have fear that if I exit in profit, and then maybe it'll go more in my direction and miss a good profit. Vicky B, that's basically it. That's greed. You see how it overlaps, because of your greed, because of your fear, you're actually going to get greedy. So yeah, Wilvin said I need to trade like a robot, and that's a very good answer, because that's how we should be doing it, right? When it comes to trading, I do webinars how many times a week, right? You guys saw my face. Go look through all my webinars. Unless I'm sick, I'm just smiling. Market crashes, I'm smiling. Market rallies up, I'm smiling, right? I take it that is actually part of my job. It's part of trading. So, I trade this systematically. I don't like grace. When it comes to trading, I do not deal with grace. All right, I'm gray as in grace. It's not either a white or a black. It's not a binary. It's not a 0 or a 1. When it comes to trading, maybe it's my years of trading experience, but hey, what makes who says that you can't have this system in mind? Let me give you a hint when it comes to trading. I do not like to deal with anything that's not black or white, blue or red, whatever color you want, 1 or 2, yes or no. I don't deal with maybe, all right? It's either a yes or a no. It's either a 1 or a 0. So yeah, that's me when it comes to trading. And how do I achieve that? It's very simple. And I'm going to give you a hint right now. I know when I should get out, right? I calculated when I should get out. The first thing is, that's basically the first thing I do. A lot of people look at how much money can I make in the market. I don't do that kind of stuff. I never do that kind of stuff. The first thing that I look in the market is always this. If I were to trade, what would be the worst case scenario? If I were in a trade, if it goes against me, where should I get out? If it goes in my favor, where do I get out? So if I have that in my train of thoughts, I would no longer hope, because before I even trade it, I know what my risk is, what is my potential gain. I do not fear, because again, I know what my risk is. I know what my potential gain is. I do not have greed, because I have a determined exit level. So if it hits, it hits, I'm out. I don't care. And, I'll tell you a story. And I don't get overconfident, because if I get it right, I get it right. If I don't get it right, I don't get it right. Simple as that. Now, let me tell you a story about greed. Okay. This is a story of my first margin call. And I'll tell you a very funny story on this one here. If you guys think you guys are new, you guys are clueless. When I first started trading, I was so clueless. I took 1 million lot size as a normal lot. It's not, right? You guys know that a standard lot size is 100,000. A standard lot size is $10 per pip. When I first started trading, I was trading $100 a pip. Okay, that's how I started trading. Why? Because back then we don't have a lot of online materials about trading. We don't learn about this in the university. We learn finance, we learn economics, but we don't really learn Forex trading. Okay, So yeah, first few weeks I hit it big. Why? Because the market only needs to make 10 pip before I started making 1,000. All right, I make a grand every time the market moves by 10 pip, and that's basically how I trade, and that's how I build up my capital. It's just dumb luck. It's stupid. It's stupid as hell because I was over trading. I don't know what my risk management is. I don't know. I don't have any money management. I do have a little bit of a technical skills from share tradings that we actually learn in uni, right? But that's about it, you know. Not clear about lot sizes. You know, I don't even know what fundamentals is going to affect the currency market. No clue at all. So I was trading 10 pips out, 10 pips out, but I was crazy. It was crazy. It was $100 a pip, and then grid kicks in because I was with 10 pips target levels. I started not getting out at 10. You know, I started hoping that, hey, maybe today I'll get 2 grand, right? And this is really funny. So so there was time. I believe it was right. No, it wasn't that. It was way longer than that. There was something. I'm just trying to figure out what it is. But instead of getting out at 10 pips, I tried to take more. Right, I want to get out at 20. So that's my greed taking over. And instead of getting 20, I actually blew up my account. All right, I got margin called for it. So, and let's share experiences. If you guys get margin call, or if you guys suffer a loss, a huge loss, can it be attributed to these 4 emotions? If you can and you want to share, if you like sharing, it's always good to share because we'll talk more about community in the session as well. But yeah, if you want to share away. Okay, so let's move on because we still have a lot to cover. I think this is going to be more than an hour's webinar. All right, the ideal psychology in trading is that you have a healthy state of mind. And that means that a trader executes his plan consistently. That's my 0 and 1. That's my white and black. I do not deals with maybe. It's either a yes or a no, right? I would like to, we should pay attention to the risks involved and not being deterred by emotions. Shut off your emotions. It's not easy. I'll be honest with you. You're not going to achieve that level, right? It's like meditating, right? Do you guys meditate? Because I do. Right, and it helps me a lot with my anxiety. If you guys don't know, I actually have anxiety issues. So I do meditate, and the first few times when I start meditating, I get distracted easily. Right, achieving blankness in your meditation, that's not going to be easy. So getting rid of your emotions, it's not going to be easy. But if you have a trading plan and you understand the risk that's involved, you should be able to minimize that emotional stuff, right? And the third point, when it comes to trading, when we deal with our psychology, if we don't want to screw up our psychology, take equal responsibility for wins and losses, okay? Take equal responsibility for wins and losses, because right now, you guys are not doing that. Fair? You can lie to me, don't lie to yourself. Because when it comes to trading, when you start winning, every 1 win is probably equivalent to your 10 losses. That's the problem with trading. When you had 10 losses, 1 win is just going to clear your 10 losses. It doesn't work that way. Okay, maybe some other mentors or some other traders tell you this: hey, if your trade goes wrong, review your trade, find out what's actually wrong with it, don't do it again in the future. No, I don't care. Every trade that you do, whether it's a winning trade or a losing trade, it carries the same weight, right? Either you lose or you win. Both of them, you actually need to look into it. Why did you lose out on that trade? What went wrong? And if you win, you need to figure out, oh, I got it right. What went right? See, a lot of people don't do the second part. A lot of people will review their losing trades. They just don't care about their winning trades. They don't actually care because they are just gonna say, "You see how good I am at trading? You see that? Because this is my track record. This is my wins. I got 6 wins. That my winning probability is 60%. Blah blah blah." They don't even want to know what went right in that trade, and I think that's a big no-no. So yeah, a lot of traders actually look. The whole financial system is actually geared on negativity, right? If it's negative, people just pay closer attention to it. If there's something positive, no one's gonna care. And let me give you an example. I deal with a lot of clients, right? And if I had a few losing trades, they're gonna call me up and say, "Hey, what's going on in the market? All right, what's the market crashing? Blah blah blah. Explain to me what's really going on." Okay, they'll call you when their account is in a problem. They will never call me when I actually gave them a lot of returns. If it's going great, they do not call me at all. So my point of view is this, and this is probably going to be true. People pay much bigger attention to the negative things, even though the positive will outnumber the negatives, right? I could be having 10 consecutive wins and I'll have 2 consecutive losses and I'll get that phone call. But I will never get that phone call from that 10 consecutive wins. Okay, that's how it is. Okay, so if you want to get better in your trading psychology, treat your losing trades and your winning trades as equal. All right, figure out why you actually lost that trade, figure out what went wrong. If something goes right, figure out what went right. Simple as that, but no one does it. All right, you guys don't do it. I know, you guys just don't do it. Okay, number 4, be realistic about trading in general. Okay, because when you guys started trading, it's greed, right? I don't know how you hear about trading, but the number one thing this is the number one reason why a lot of people trade, or number one reason why a lot of people do day trading instead of long-term investing. It's this: I, with a small amount of capital, could have crazy returns in a short period of time. That is not realistic. That's not realistic about trading in general. Okay, using high leverage in trading, not really caring about your risks, not really caring about how much equity you have, that's not realistic in trading. Because I'll be honest with you, if you guys are here, if you guys are thinking that, hey, let me start with $100, and in a month's time that $100 is going to be $1,000 or $2,000, that's not realistic. Because right now, if you're thinking that way, that means you are looking at 1,000% increase, 10 times your initial equity just to get to $1,000. If you're saying, hey, I'm going to start with 100, in 1 month's time it will be 150, 130, 140, that is still reasonable. See where I'm going here? A lot of people are just not being realistic about trading in general. Okay? So, let me go through some of the questions. I've urged to place trade every day. This is something you need to deal with, right? If you have the urge to trade all the time, even though the market is not right for it, it really depends. If you're an intraday trader, that's your job. You are going to be looking for trades every day. But don't make it that you need to have a position every day, even though it's not in your favor. I think that's really bad. When I'm trading, I'm scalping always when I'm in profit, and does this make me be less profitable? I'm not sure with that. I want to be able to control greed and fear. Yes, okay, that's the whole goal. Do you recommend algo trading since it has nothing to do with the 4 emotions you have mentioned? Depends. If your equity is huge and only if it's huge, then algo trading makes sense. But only if you know that algo. I don't trust a system that's not built by me, so I built my own system, right? I just don't trust. You guys probably heard about this. I don't know where you guys are from, but there was a huge issue with the whole financial market in the past 2 years, and that's robot trading, right? It's not new. It's technically not even algo as well, because algo is a completely different thing, right? We don't really call them algos. We call them quants, right? They're based more on mathematicals than taking a look at technicals, right? So if you build something, does algo help? Yes, it does help to a certain degree if you know what that algo is doing. If that algo is it's suitable to your trading style, to your trading ideology, then I say why not, right? Do you trust a machine 100%? No, I don't really trust a machine 100%. So I do run algos, but I do check on them every week. Okay, so yeah, does it help? It does help a lot. Normally lose during news, but under normal circumstances, I'm good. Then if you know that you're losing during news releases, then maybe you shouldn't trade during new releases. When we're running on profit, we say greed is good. While running on losses, look, greed is always good. I'll be honest with you. If greed is not good, we're not going to be here. We don't have this session right now. Okay, it's just that how far are you going to take greed? What is faith? Faith and hope. Yeah, I think I answered that one. You can use dictionary or Google, it'll give you a better understanding. Yeah, do that. Okay, so this is your ideal psychology when it comes to trading, all right? There's really not a lot. It's just 4 pointers here. All right, so if you want to be a consistent winning trader, you will need 3 things. Number 1 is your methodology. Number 2 is good money management. And number 3 is actually managing your mental state. So it's methodology, money management, mental state. It's the 3 M's, right? That's basically it. Do you need anything else other than this? Not really, because number 1, methodology is actually where your technical and fundamental is. This is your methodology. See what's going on here? This is only 1/3 of things. Your methodology, it's your trading strategy, how you actually analyze your risks. Okay, I'm not even mentioning money management here because risk management and money management are 2 completely different things. So if someone say risk management is money management, then they know nothing about trading. Okay, so your methodology is going to be your risk management, your risk assessment, your how you look at the market, what time you should be trading, what kind of trader you are. That's all going to fall into methodology. Good money management is going to be how much equity you should start with per equity that you have, how big a position that you should have. Those are going to be money management. All right. How are you going to grow your equity? That's going to be your money management. It's not risk management. It's money management. All right. Number 3 is obviously managing your mental state and how do you cope with stress in trading. Look, I'll be honest. Trading is stressful, but we find ways to not be so stressful about trading, because if you are stressed out, then maybe trading is not for you. Yeah, I'll just be frank right now. You think trading is a pain to you every single day, then maybe it's not for you. But if you think trading is a pain to you every single day because you're missing something and you're taking the time to learn about it, then it's not in vain. Okay, so I would say when it comes to trading, make sure you enjoy it. Make sure you pick up, you understand what's really going on. You know why you went wrong, what went right. That's managing your mental state, right? If you guys play games, this is what my advice is. I trade and I play games while waiting for a trade, while a trade is running. I kind of distract myself. I don't really stare at the chart all the time, right? Because if you have your exit strategy, if you got your methodology right, your risk, where's your stop loss, where's your take profit level. There's nothing really much you can do, right? So instead of staring at the market and say, oh no, this is not going right, just sit back, relax, right? It's either a yes or a no. It's either that you are actually going to be profitable, or is it going to hit your take profit, or is it going to hit your stop loss? So my definition, and when it comes to trading, is really be a little bit more systematic, be robotic. I don't like the in-betweens. I don't like the maybe, could this be? I don't like the word maybe in general. I just do not like maybe. I like the word probability because I can calculate that probability. But when it comes to maybe, it's I don't know. I just don't like maybe. Okay, so is it a yes or a no? And that's about it. All right, so let's talk about risk to reward ratio, because there's a logic behind the reason why I don't actually do intraday trading. So when it comes to methodologies like scalping, because when you scalp, typically you have a risk that's a lot larger than your reward. All right, it's just that maybe you have a train of thoughts that, hey, maybe if I, just nip a few pips here and there, it should be easier to get 5 pips compared to 50 pips. I'll tell you right now, it's not, because scalping is actually going to be the hardest form of trading. It's not actually for beginners, but I don't know why every beginner started with it. But let me give you the logic behind the risk to reward ratio. All right, so this is not gambling, by the way. This is probability, and that's the sound logic to it. So let's say we have a coin. All right, it has two heads. Two sides. We have the head and the tails. Now we decided one being a buy and the other one being a sell. Right, simple as that. It's just a very simple logic. Now the probability, if you don't know what you're doing, is going to be 50-50. You just cannot predict. Is it going to be heads next, or is it going to be tails next? If someone tells you they can predict whether heads or tails next, that's BS, right? One coin, two sides. Probability is just going to be 50%. That's it. So, tossing a coin tossing it 10 times, your probability is going to be 5 win, 5 loss. That's the logic. If the risk reward ratio is 1-to-1, then it's going to be break even statistically, right? You're not going to get 5-5 exactly, but the more samples that you collect, the more the average is going to be. But let's just assume you flip it 10 times, the average is going to be 5-5, because the logic is that it has two sides and the probability is going to be 50%. So if you trade with a risk to reward ratio of 1-to-1, you are going to break even. You're not going to lose out, but you are going to end where you start. That's why I like to use 1-to-2 risk to reward ratio, because if we flipped it 10 times, right, with the 5 wins and the 5 losses, with a 1-to-2 risk to reward ratio, my losses are going to stay at 5. My wins are going to be at 10, because I'm aiming for twice the risk. Okay, so you are guaranteed to get that extra 5 points in terms of probability. Okay, so this is one trading methodology with a very sound logic. And obviously there's a lot more methodology, but I like to explain this because when it comes to trading, and when it comes to my webinars, we'll talk more about risk reward ratio. Typically, I do not like a 1-to-1 risk reward ratio. Some people say, yeah, why not? Because I know probability wise, I'm just probably going to end up where I started. I'm just going to be wasting my time, because when it comes to trading, it's not money that's being wasted. It's actually my energy and time that's being wasted. Okay, so I don't like wasting my time. I need to have a higher probability, and I could get a higher probability just by increasing my risk to reward ratio. Okay, does that make sense? Alright, so that's the logic behind why we look at risk to reward ratio, and the reason why a lot of people actually trade about risk to reward ratio. I don't know how many traders, new age traders. I'm from a completely different era. I'm probably like a very old car, but this is how we do it. All right, and this simple logic here, it's basically what's making me a little bit more consistent, because I tweaked the probability. So instead of being 50%, I tweaked it to a little bit more. It'll be about 70%, 75% more just by tweaking the risk to reward ratio. Okay, hopefully that makes sense. All right, so let's take a look at stages in performance development. So we basically have three categories. It's going to be a novice. If you are new, someone was asking how to get started, blah, blah, blah. What is trading? What is Forex? Then you are going to be a novice, right? You are a novice. And then you come to the competency, right? You're being competent. And then you become an expert. Okay? This is stages in performance development. This is not stages in trading development. This is performance development, right? You can do anything in your life. You learn a new language, get started in a new job, play a new sport, play a new instrument. Every phase of a development is going to be like this. This is not just trading. Again, we're talking about trading psychology, so let me be helpful, because I'm going to compare trading to any other jobs out there, any other sports out there, any other things out there, right? When you started to, let's say, a lot of people found a lot of new hobbies during the lockdown. Some people started painting. Some people started playing instruments. Some people started learning new languages. Right? You're gonna start with being a novice, being competent, and then you're gonna be an expert. Okay, it's going to take time, depending on how much you practice. Right? You could move on a lot more faster. Right? How you train. But this is stages in performance development. It's not stages in trading. So anything that you do in life comes to these three stages. Let's say you go to primary school, right? That's being a novice. You go to high school. That's being competent. High school and I would say novice is basically primary school and high school. You become more competent when you learn new stuff. When you start going to uni, you started your first few jobs, and then you become an expert if you stay in the same job for more than 10 years. Simple as that. Okay, so that's a comparison. All right, so when you are new, this is what you should be doing. You should be asking questions. You should be asking a lot more questions than what you're doing here right now, because we've been doing this webinar series on education, and I'll be honest with you guys, I don't know whether it's me or am I not being fun at all. I don't get a lot of questions from you guys. So if you guys are new, instead of asking how do I get started, all right, you should be asking other things. Because if you ask me how to get started, I would point you to the website, download the platform, and just trade away. That's how you get started. Simple, right? But you need other stuff, right? You basically need to learn the basics. You're not going to go anywhere if you don't understand the basics, because I saw a lot of people just come in every week and say like, where do I get started? Where do I get started? And I point them to the webinars the previous week, and no one actually watched that webinars the previous week. The person that asked me the question probably didn't watch the webinar. It's just human psyche. It's just human behavior. Okay? You want to get better? Ask a lot of questions. You want to get better? Learn the basics. Be strong with the foundations, right? I don't do complex stuff. I just need you to repeat the same basics over and over again. Now, most mentors or educators will actually fail to carry out their duties because they only teach strategies and setups for profit. Because, as I say, it's not all about the profit. I don't care about the profit. And the only person that tells you here, but I always look at the worst case scenario, is never a good thing. You can call me, you can treat me as a very negative person, but I always, in everything in life, right, I always think of the worst case scenario. Maybe that's part of my anxiety issues. I do not know. But when it comes to trading, I never hope for the best, right? Because I always hope that if something bad happened, I know where I should be getting out, right? I'm preparing for the worst case scenario. So I never actually really hope for the best. I don't really tell people, let's hope for the best, right? If we are in a deep problem, I never say let's hope for the best. Either you work through it or you ask for assistance, but I just don't hope for the best, right? Maybe it's, if I look back and you ask me how do I become more consistent in trading and stuff like that, maybe it's because of my anxiety issues. I always look at the worst case scenario. Okay. So imagine studying medical theory and then performing a surgery. I like to use this analogy. And the reason why I say uni students are probably just more on the competency stage. You can learn a lot of strategies. I can give you my strategies, and without any exercise, you do that in a live trade, you're just going to blow it up, right? If someone that studies medicine, right, someone wants to be a heart surgeon, they only learn the textbook theory. Either they're a super genius that they can perform a surgery and the guy comes out alive, or they're just gonna murder people in the operation theater. Simple as that. It's just simple logic. Okay? So most novice traders will actually fail in trading. And statistically, this is actually very high. You guys know that. I don't need to be here telling you guys that you guys are gonna screw up. You guys are not going to experience losses. Novice traders will fail. They will fail, okay? And that's going to cause harm to their trading career by being impatient. You will fail if you are being impatient. You will fail if you assume that someone shared with you a trading strategy and you just immediately say that, yeah, that's going to work. Or someone comes up to you and say, use this strategy, it's going to guarantee you 100% return. You will fail. Okay? So we don't trade based on assumed knowledge. Whatever I'm telling you right now, you shouldn't trust me. Right? You should review it and then see if you actually could fit it into my theories, right? So if I were to give you a trading strategy, theoretically, my performance is going to be different from yours, right? I can use Fib like nobody's business. I can share with you how to actually use Fibs, but your performance probably wouldn't match my performance. So if I were to show you my trading results and you copy how I trade, you're not going to get the same results, okay? Does that make sense? So do not base stuff on the assumption. Simple as that. This is novice traders, and you guys are going to do this. So to me, you need to be asking a lot of questions. You need to learn the basics. Do not assume that everything is right. Do not assume that whatever a trader say is right. Right? I don't even want you to assume. I don't want you to believe right now that I am a consistent, successful, and veteran trader. Don't believe it. Simple as that. Do not assume that everything I say is going to be right. You need to decide that for yourself. And that's your job as a novice, because you need, it's like a kid growing up. You go to school to understand what is right and what is wrong, what is acceptable, what is not acceptable, what is believable, what is not believable. All right? No one's going to be there to get it right for you. A teacher is going to be there to guide you, so I could guide you, but whether what I say is right or whether what I say is wrong, that's dependent on what you believe on that assumption. Okay? Alright, moving on. Being competent means you already know the basics, right? You at least know something, and then you will start demo trading. When you demo trade, the whole purpose of the demo trade is actually to practice, right? That is your self-training to be consistent, to be disciplined, okay? Apply what it is that is learned at the beginner stage before you even started your demo trading. Apply it and practice and train, okay? Identify each niche or specialty. This is the time when you actually start figuring out, hey, I'm good with pound USD. I'm really bad with Euro AUD. I like the dollar yen. I don't like the Euro USD. This is the phase you actually need to understand, right? This is also the phase where you need to identify the trading types that you are comfortable with. Because I'll be honest with you, and I really hate the industry right now. There's a lot of people that gave out signal services. There's a lot of people say, hey, buy here right now, stop loss here, take profit there. You guys in my Telegram channel, I've never done that. I gave you choices. I gave you your support and resistance. You make your own decisions. I never outlined specifically, this is your stop loss, this is your take profit, get in now, buy here, sell here. All right, I don't do that. You know why? Because not everyone is going to have the same outlook as I have in the market. And the problem with a lot of new traders is that they don't want to learn. They don't want to understand the basics. They just want, hey, what to do? Tell me. Give me the signal service. Tell me what to do. Should I buy here? Should I get out here? And everyone just do that, right? Everyone just believes that the trade signal is going to give you a return. Really? You know, it's too good to be true, right? So I don't do that. And you guys that know me, every time you go to my outlook, I'll give you your probabilities. I will give you several stop losses. I'll give you several choices on your take profit levels, but I never tell you sell here, right now, and then you should be okay. All right? Don't do that. Because it doesn't work for everyone. This is why you need to identify your trading style. You need to identify if you are a scalper. If you need to identify if you like trading intraday. It means opening and closing a position within the day. Maybe you want to be an intra-week trader. You could be a swing trader. You could be a position trader. During this stage in your trading career, you should have some picture about how you're actually going to trade. What time you should be trading, what currency you should be trading, what kind of assets you should be trading. This is the stage where you need to understand stuff. And then once you understand all that, you need to build consistency. Okay? Let me pause here for a little bit and go through some of the questions here. We're about to trade. What are things to look at or for before we start a trade? Again, before you even trade, I would say the only thing that you need to figure out is your exit levels. That's basically your stop loss, your take profits, not your entry. Okay. The entry into a trade doesn't have to be perfect, but if you know if something goes wrong, this is where you should get out. If something goes right, this is where you should get out. I think that's more important. Can you be a successful trader by buying signals from other traders? Of course not. That's basically what I just explained. Do you really? I don't even trust myself. How do you want me to trust other people? Right? If I were to tell you, hey, the market is going to be going down, like the Euro USD or the Pound USD, right? I say that. If you don't understand the market, you're just going to believe me. I don't want you to do that. I don't want you to just believe me. I want you to listen to me and then compare it, look at it yourself, and decide if what I say makes sense. If what I say doesn't make sense, don't. So I don't really like signal service. I think it's one service I've never provided. I provide analytical services. I do a lot of stuff. I just don't provide signal services. Simple as that. Losing and playing a train. Does it spill over? Nah, it's a different thing. Can you tell me how can it be profitable, as we know this industry is zero-sum game? Thank you. A very good question, and I'm going to give you an answer. Long life, if you're profitable, maybe Mudasar could be losing a position. All right, it's a zero-sum game. This is the whole financial system. It just keeps growing and growing. So how do you actually be profitable? It's actually very simple. Just by having that 1 to 2 risk reward ratio, you actually have a higher probability of being profitable to the guy next to you that probably don't do 1 to 2 risk reward ratio. So improving on your probability is how you become profitable and how you become consistent in trading, minimizing your risk and stuff like that. So there's a lot of stuff, but it is a zero-sum game. I'm not gonna lie. Someone wins, the other side is gonna lose. Simple as that. Someone gets to become super rich. For one guy that reaches their goal, Maybe 100 people blow up their account, right? Do I like it? It's not. I don't like it, but hey, that's the fact of things. That's the industry. Should I blame the industry? No, because that's my field. What am I gonna do? Everything in life is basically just a zero-sum game. All right, you win, some other people just lose out. It's as simple as that. It's the I would say it's the rule of the jungle. Someone get eaten, someone gets to eat. Today, while browsing through market insights on OctaFX, the Fed continues to give hawkish comments. Does that make dollar strong for the short term? If the Fed does make hawkish comments, does it matter? It might cause a little bit of a bump, but in the long run, we know what's really going on. You trade using stop losses or cut losses. I never cut my losses. All right, you hear that? This with 100% assurance from me. I never cut my losses. I always get stopped out. I adjust my stop losses. I will never cut my losses. Okay, because the word cutting your losses means you don't have a plan. It's as simple as that. See how one is stop, one is cut. If you think that you need to cut your losses, you don't have a plan. Okay, because if you have a plan, you do not cut your losses. You get stopped out. So yeah, maybe this is going to be a hint. This could be a pointer. I do not cut losses. I get stopped out. Simple. I actually started learning trading because of my copy copy trade failed. Yeah, see, but you started somewhere. You started with greed. Thanks so much. I'm a beginner. This is actually super great for a beginner, but just bear with me. As I say, this is going to be more than an hour. We're barely even halfway through. We've got 8 more slides to go. So hang on, stay with me here. I know some of you guys are probably exiting this, but you guys that stick with me, you're not going to regret it. Is it like where first daily time frame trader says uptrend, second hourly time frame trader say downtrend? So we can't assume which is correct. That's exactly right. Even if both are observing the same daily chart, they might have different conclusions. So for how long can I focus on a particular strategy of my choice? For as long as you can be, as long as you train on it, you like it, you keep improving on it. Look, what's the word? Yeah. Jack of all trades, master of none. Right? I don't want to be the jack of all trades, master of none. I would be a master of one thing. I might sound like a broken record, but I would train myself to be good at one thing. It's like playing basketballs, right? We've got people that do 3-pointers a lot more. We've got people that do a lot more dunks in it, right? People do defensive positions. They train to be on the defensive. Some people train to be on the offensive. They focus on something and they repeat the same thing over and over again. So it's just like that. Can you focus on a particular strategy? Yeah, focus until you be a master in it. Is it good to watch a running trade because it affects the way I feel when it seems the trade is coming to my stop loss? So what's best? Stay away from monitoring constantly, or once in a while trade the hourly time frame. You can check every hour if you want to, but Dio, if you have your stop loss, if you have your take profit, I don't care, because I do the same thing as you did. I look at the trades, and this is where I know. The longer I stay in front of the charts, the more I look at it, the more emotions that plays out in my head, right? Because I have anxiety issues, and I'll be honest, I'm fine. I do have anxiety issues. I got nothing to hide with it. So maybe, I use my weakness as my strength, because I have anxiety issues. I try not to focus too much. That's why I just leave it. I don't even bother checking on it unless something big happened. But then if something big happened, what are you going to do? You got your own trading strategy. You're going to stick to the plan no matter what, right? So what good is it to you just staring at it? You stare at it if you don't have a position and you are looking for a position, then you stare on it. You keep checking on it until you get your positions. But once you have your positions, move away from it. Simple as that. Which trading house is best? Depends on what currency you want to trade. Depends on what assets you want to trade. Then you decide on the time. But we'll talk more about this during risk management and stuff. Do you have any tips? Like a few days ago, I cut my trade because I don't feel confident on it. That's fine. If you don't feel confident on it, you can cut your trade. That's okay. But the reason why I don't cut losses, and let me give you an example. A few days ago, you cut your trade because you don't feel confident. Okay, that's okay. That's completely fine. You can do that. That's one way on managing your risk. Okay, but what if, because you closed your position and then it went all right, it will create another emotion, which is called anger, because you cut off early. If you didn't get out from your position, then you would be fine. You get out of your position because of fear. This is good if you cut your losses because you don't hope. All right, that's good. But because you have your fear, that's going to trigger anger, and then you are going to say, you know what, let's just jump back in again. And then it doesn't go in your favor again, then it all builds up again. So this is the reason why I don't really cut losses. I'll tell people to get off their positions, but I don't do it myself. And for a good reason, because I know what kind of emotion is going to be triggered. I'm going to get angry. I'm going to say, you know what, things could be different if I didn't do this. I don't like that word. What meditation you do? Mindful, transcendental. Look, if I can just shut off any noise, that's pretty much it. I don't do crazy meditational stuff. I just go with my Mindscape apps and be done with it. Simple as that. What are the positions to look at for when entering a trade? Can you be a little bit more specific in that? All right, so this is your competency stage. This is going to be your expertise. When you go live trading, you should be an expert. You should be able to grow your risk tolerance. You should be applying your niche and consistency in trading. So you have your specific time frame that you want to trade. You have a specific time of the day you want to trade. You have a specific asset you want to trade. You have a specific strategy that you want to use. Okay, and then you start setting your goals. And then the next thing you do is you start improving your performance, okay? Because you got nothing else to do, because you already know the basics. You just need to keep training and improve your performance. But this is your expertise stage, okay? So very simple, nothing much to do here, nothing much to look at, okay? Number 2 is growing your risk tolerance. This is why I say I'm fine with 100 pip risk if I have a 200 pip gain, okay? A lot of people that jump in probably are not comfortable with 100 pip risk, and that's completely fine. Okay, so adjust accordingly. All right, trader stages. Number 1, we got your foundation. All right, that's basically your learning stuff. Okay, number 2 is actually sampling collection. A few examples is that you sample a few various strategy. You sample various materials. Maybe you learn your fundamentals, you learn your technicals, right? You take my strategy, you take B strategies, you take C strategies, right? Learn from many people's. As I said, I don't want you to just believe in me. In fact, I don't want you to believe in me. I want you to come to the conclusion that I should be believable, right? But hey, you can learn from a lot of other mentors, and then you decide for yourself which one makes sense, which one doesn't make sense. But I want you to go out there and learn. Okay, find out what is good for the building experience. Okay, this is your sampling collection. Selecting the specialization stage to focus on. Should you be focusing on one specific currency first, or should you be practicing on one specific strategy first? You need to understand what you need to focus on. Okay, so you need to try several trading strategies. You need to try several trading styles to come to the conclusion that you are comfortable using this strategy, you're comfortable being a day trader, you're comfortable being a swing trader. But how would you know if you never tried being a day trader? And how can you say that being a swing trader is bad if you never be a swing trader? Okay, how would I know if scalping is actually really bad? Look, I'll be honest with you. I scalp, I intraday, I do intra-week trade, I do swing trades, I do position trades, I'll do multi-month trades, I'll do multi-year trades. And off the whole bunch, the hardest thing to do is actually scalping the market. Okay, with a 5-minute time frame, 50-minute time frame, and I get in off the market, that's the hardest thing for me. That's for me, it might be super easy for you. But my logic is pretty simple. I have a swimming pool, and you guys probably heard this before. I keep saying it. If I have a swimming pool, there's 100 sharks in it. How many times do I want to jump in? I want to jump in once a week, because that's going to reduce my probability of being bitten to death by sharks, right? But if I were to scalp the market and I jump into the pool 100 times a day, I have 100 times 100 possibility that I could be dead by the end of the day. As simple as that. Okay? So other than that, you can try several instruments to trade, sample a lot. This is your sampling collections. Okay, so foundation, you understand what's really going on. You know what you're dealing with. You know what Forex is, how to trade Forex, how to read the news. That's your foundation. Number 2 is figuring out your samples. Number 3 is to adopt technology to improve trading. Someone mentioned algo. Algo is technology. Can it improve your trade? Yes, it definitely can. All right, number 4 is you want to be consistent in your profit. Okay, and then number 5, you want to find high probability trade. Okay, number 6, you need to be able to measure and manage your trading positions, which we will talk more about during risk management and money management. Number 7, you will need to understand what is your individual risk tolerance, because everyone has a different risk tolerance. Okay, and number 8, you need to understand how to measure market breadth, how or what is likely going to happen. Last week we got CPI numbers, and then this week, if you take a look at this, if you take a look at the candles, it looks small, but if you look at the size of the daily range, it's huge. You need to be able to adapt and understand what's really going on. Okay? All right. So, a reminder that everyone has a different skill set. Everyone has a niche that benefits them. Okay, my niche is the cable. I focus a lot of my trades on the cable. I focus a lot of my trades on anything sterling. I don't really focus a lot on anything Canadian, New Zealand. Yeah, I don't even do much euros. I do a lot more sterlings, right? Know what stage you are at as a trader. Are you a novice? Are you being competent, or are you being an expert? Okay. But if you trade for 10 years, then I think you should fall into the expertise stage. But I don't know, because I've seen traders that trade for 10 years and they can't be consistent. Okay, so I think building consistency is actually key. It's not being how profitable you are, it's actually being more consistent. Focus on doing what it takes to succeed at that stage. So if you're a novice, then you need to ask a lot more questions, learn the basics. If you're being on the competent side, then you want to experiment a lot of stuff. If you're being on the expert side, you want to start growing your risk tolerance. You want to start, being more consistent. Okay? All right. So the needs of each trader's mentoring or coaching will be different and must be adjusted to the stage of a trader's development. Trading consists of several learning curves. So the question that you should need to ask right now, today, after this webinar, is actually at what stage are you now? Because if you don't know what stage you are at now, you're not going to be able to fix anything from your psychology. You probably are doing things the wrong way. So you really need to understand what stage you are now. Do not lie to yourself. You can lie to other people, but never ever lie to yourself, because it's not going to do you any good. Okay, again, there are not going to be any shortcuts in trading. Sorry, pop your bubble. No shortcuts in trading. So I can share with you a strategy, but you need to work on it. You need to practice on it until you become an expert in it. Okay, so there's no shortcuts. All right, it's like building muscles at the gym. Right? It's not like, hey, I can lift 50Ks, and then I'm going to be strong enough, right? The guy next to you could be lifting 5 kilos 1,000 times a day, and they'll have a much stronger muscle than you lifting a 50 kilo bar once. That's it. Okay, so there are no shortcuts. You want to build muscles, you go to the gym, you watch what you eat, right? You continuously work out until you see your results, right? You can't build muscles. You can't be like Arnold if you don't hit the gym how many hours a day and stuff like that. You just can't do it. As simple as that, right? You can't be Cristiano Ronaldo if you don't put your time into kicking the ball 1,000 times a day. Maybe, I don't know. I don't play soccer. I'm not into soccer, but hey, World Cup is coming, so maybe you guys like soccer, right? So think about it as sports. You know, the more you practice, that's where you start learning. Okay, you want to become a better trader. It's not really about listening to 100 people telling you 100 different stories. It's picking one and then keeping at it until you're really good at it. As simple as that. All right. The difference between a trader in the financial market and other professional is that the market changes. Is that market changes are always happening, and the speed at which a market changes are really, really quick. Okay, so I play tennis. Tennis rules hasn't changed in like forever, but tennis rackets change. How you do a forehand and a backhand changes. How we do forehands in the 80s and how they do forehands right now, it's different. They even name it a modern forehand, and then you have the old forehand. They put a lot more spin on balls right now. They don't do a lot of spins back in the days, right? So it evolves. It just evolves a lot faster in the financial world, okay? High consistency and high accuracy are two different things and almost impossible for one trader to have. I have a high consistency. I don't have high accuracy. Or do I? I don't know. Okay. I do have high consistency, and I'll be honest with you, but I don't go crazy on high probabilities. As long as I'm being consistent, I'm okay. I don't need to be 100% probability correct, blah, blah, blah. I don't. I never aim for anything 100% because aiming for 100% and anything in life, it's just, hey, maybe I'm a downer, but I'm just stating the facts here right now. It's never 100% guarantee on anything. All right. So I always, if I'm so confident in one thing, I'll say it's 99.9%, but there's always that 0.01% that's going to screw things up. That's life. Okay, so I never say anything is going to be 100%. Okay, so you need to be a lot more consistent than being able to have high accuracy. Okay, simple as that. It's two separate things. Okay. All right, we're about to wrap up, so don't worry. We'll definitely wrap up in 10 minutes time. So the key to improving our psychology as a trader is in our ability to recognize patterns. This is simply known as pattern recognition. This is basically in the field of psychology. Every field of work has something we call pattern recognition. We look at technical analysis and we say, hey, there's a triangle pattern. There's a flag pattern. We are recognizing these patterns. There's a dark cloud cover. There's a morning star, right? We call this pattern recognition. But this pattern recognition is actually going to apply to you psychologically as well, because by reviewing and replaying your trades to learn your winning patterns as well as your losing patterns, you are actually going to start finding patterns in your trading. Right? Pattern recognition speed is going to be very important, so you need to learn to process information quickly and correctly from your previous trades. Okay, whether it's a winning trade or a losing trade, you need to review it as soon as possible, find out what's wrong, and then you use it for your next trade. So successful traders does not view the market. Okay, they're successful because they review the markets. They review markets for patterns and look for opportunities quickly when it arises. So I become successful not because I predict what's going to happen. Do you realize with every outlook that I have, it's not really predicting? It's I'm actually looking at something in the past. I review the market every week. The weekly outlook is actually a market review. Okay, we just call it weekly outlook because it seems like I'm giving you an outlook. It's not. I'm actually reviewing what has happened. And the first slide in every outlook that I have is actually the previous week recap. Okay, I review what happened last week, and I'm going to use that information that I have to figure out what's likely going to happen this week. Okay, so the key is actually not viewing the market, it's actually reviewing what has happened in the market because I'm looking for patterns. Very simple. Okay, most traders are focused on trading during development phase. They ignore training for pattern recognition. You know why? Because they think if I figure out a new strategy with a high probability, they don't even bother reviewing what happened. They just assume that it will happen. Okay. So pattern recognition is not just for market patterns, but also a pattern on how you behave and react during a trade. So I like to keep a trading journal, and I encourage you to keep a trading journal because from my trading journal, I'll be able to look out for my patterns at a very specific day every week. I will lose my trades. Sorry, I have a high probability of losing the trades. And that day for me is actually going to be Monday and Friday, and a very specific time, a very specific currency. And I would know that because I review my trades, I review my patterns, and that's how I find out. I'm good at trading the pound USD. I'm so bad with trading dollar CAD, dollar Swiss, Euro AUD, and stuff like that. So that's where I build my niche. But I look at patterns that I develop as a trader. Okay. All right. So time for Q&A. Let me go through the chat here. Hopefully you guys are paying attention. Hopefully you guys are not bored. Hopefully you guys get a lot out of this. And if you got any questions, type it in. Let me answer it. I know this is running, nearly half an hour past, but hey, it is what it is. Which trading house is best? I already answered this just now. It really depends on what you trade. Okay, if you trade cable, then the UK session is going to be good for you. If you trade the yens, then obviously the Asian session is going to be good for you. Or you could trade that during the American session because the dollar yen moved during the American session as well. That's what happened. I have thought time thinking close it or not, and when I do, I have a thought time because if I leave it, it hits your take profit. You from China? I'm not from China. I'm from Australia, mate. What are the patterns? This is your thought patterns. So what I'm trying to say is that it's not just the market patterns. You need to find out what your own patterns is. Don't worry, we're not there yet. You'll find out what your trading pattern is from a trading journal, which we will run a separate webinar for that. I think there's going to be a mention of trading journal and the risk management side. All right. Okay. Okay. No questions? All good. You guys get this? So again, I don't want you to just believe in me. In fact, I don't want you to believe in me. I want you to come to your own conclusion. Should you even consider what I say here to be sensible? Okay? No rush. Don't rush. No one should force you into trading. No one should force you to stick to a certain mindset. You need to figure out a lot of these things yourself. So there's no Panadol. There's no painkiller like if you have a headache when it comes to trading psychology. You need to understand yourself. So a lot of people can say a lot of things about trading psychology. There's a lot of methodologies, blah, blah, blah. But at the end of the day, the basic on how you get started in improving your trading psychology is to understand yourself as a trader. I think that's the best I can say. Little about patterns. Which patterns do you want? Can you be more specific in what patterns you're asking for? Is it chart patterns or is it what patterns? All I'm saying is trading is consistent learning. No, all I'm saying is trading is not consistent learning. You can learn a few things, right? You can learn a few basics. Be consistent in practicing it. As simple as that. Because I could play basketball and I don't know the rules of it. If I keep doing a 3-pointers and out of every 10 shot I get 9 in, I don't even need to know the rule of basketball to be good at it, right? Simple as that. I don't even need to have a basketball strategy. I can just stay in the middle of the court and just start doing 3-pointers. So it's not how much you learn. It's applying what you learn. That's how you become consistent. Does that make sense? I don't want you to go out there and learn 100 things, but don't have a clue on any single of them. You can learn 100 strategies, but at least pick one and then, improve on it. I'd like to ask you, as a day trader, which time frame do I recommend? As a day trader, I do as a day trader, I actually look at 10 minutes. You guys don't have 10 minutes. Stick with 15 minutes. As a day trader, you can look at a 15 minutes. I think that's reasonable. You can look at the hourly time frame. I look at both the hourly time frame and the 50 minutes. As a day trader, I don't go looking at the 5-minute time frame. I don't look at the 4-hour time frame because those two are out of my scope. Key things to focus as a day trader. As a day trader, I think the key thing to focus is actually really simple. If you look at the chart throughout the day, it's always within a potential breakable range. Okay, if you saw a little bit of a pause in the market, that's what you need to watch out for. If the market goes flat, that's where you need to be on standby. If the market start running, do not go after that trade, especially an intraday trader, because most of the time you won't be able to catch that running trade. You should be able to preempt a potential run, a potential breakout in the market. That's my tip as an intraday trader. All right. All right, Rotash, if you want to talk a little bit more about patterns, think about what I say in the webinars. And if you want to be more specific, you can jump in on the Wednesday session. You can ask me again about what specific patterns that you're actually asking, because I cannot answer what you want me to talk about more patterns. What patterns is it? Is it your psychological patterns? Is it your trading patterns? Is it a market technical patterns, or is it a fundamental pattern, or what is it? Okay, be more specific with that question. But I'll be more than happy to answer that on Wednesday. Look, it's been 1.5 hours. I know you guys are tired. This is on Friday. Thanks for attending. Thanks for listening to me rambling on about psychology. Hopefully you get a lot out of this. And if you like this, share the link to your fellow traders or other people that you think needs to listen about trading psychology. All right. Other than that, have a fantastic weekend, guys. And I'll see you Monday on the Outlook, Wednesday on these live sessions. And again, next week, I think it should be trading psychology too. If not, we'll go straight into risk management. Okay. Other than that, good luck with the trades. Have a great weekend. Stay safe, everyone. And I'll see you soon.